All right, let's go ahead and start on our morning routine here, guys. We got crude up. We might as well start here. Seems like as good of a place to start as any. Let's zoom out and take an overall view of the crude so we have an idea of what's going on here. Um, Pretty much been in a sideways range for a year, guys. It's pretty well what you're seeing. We have a couple of these peaks, a couple of these troughs that we're dealing with. But as far as right now, you can see we are really getting pinched in here. And what I mean by getting pinched in here is we get all our momentum, all our moving averages shoved into this one little bitty area. That means we're getting pretty pinched in here. Things are getting pretty concentrated into this one little area, and it's eventually going to cause this thing to pop a little bit. That's what happens here. We got pinched in here. We got a little pop. We got started to get, I guess, to be honest, we got pinched in right here just a little bit. A nice pop. Same thing here, a nice pop. So that's just the nature of the markets. They're ready to pop. Once they get pinched in a little bit, they start to pop. So which way is this thing going to pop? That's been the $1,000,000 question over the last about 2 weeks. As you see, we've been trading inside this little range here for a couple weeks now. We've been inside this little bitty range here for a couple weeks now. Hence the lack of crude trading. We've taken 3 crude trades in the last 7 trading days here. So that definitely affected our crude trading. We've been resorting to other instruments simply because we've been getting pinched in here. But now you can see crude. We have these numbers marked up here. This 100.25. That's this pink line you see coming through here. That's also the 38% here. But we've been using that 100.25 over and over and over from an intraday basis because that was this previous swing here that originally got a bounce and then caused the market to roll over, and it used it as a ceiling over and over and over, and then as support over and over and over. Now we're maybe just now starting to get a pop. This is what we've been waiting for, just being really, really patient. As you see here, I got one comment saying, what about the fib? Low to high, we have a fib here, guys. We got this low to high. We got a pullback. We tested our 50% and we tested our 38%. So we're just waiting for this thing to go ahead and push on higher. If it is going to fill the target for this measured move, we are looking for crude to head up around that 108, 109 area. We're looking for crude to head back up to that 108, 109 area. And if you look back in time, you can see that area caused a lot of havoc here. It became a magnet for that market and would not allow the market to head anything higher. You see it had this little poke up higher, but as a whole, though, a lot of it's been stuck right there at that 108, 109 area. So that would be a nice target for a position, being that this holds. So, but nonetheless, from an intraday perspective, what are we looking for? If we can continue to push higher, continue to hold above the ranges of this small term range. You see this previous peak here that we're dealing with on Friday. We were inside Friday's trading range all day yesterday. Now what do we have? Look at yesterday's trading range. We have already broken out of yesterday's trading range. Now, needless to say, we did have a huge jolt in the middle of the night last night to the upside, which is what's showing a lot of this move. But moving forward, I'm going to see if we can continue higher. I'm going to see if we can test Friday's high and find a support there and continue on higher. If that's the case, I will look for new highs as we start pushing higher and higher. If not, I'm going to be a little bit leery because we have Friday's high, and then a little bit lower than that, we have yesterday's high. So we start breaking down. We got a little bit too much support for me to get aggressively short on this thing until we would actually get down below yesterday's low or yesterday's high. So for me to get short, I'm going to be cautious until we break below previous day's high, meaning that we would get back inside of the previous day's trading range. That makes sense? That's the only shorts I'm currently looking for. Other than that, I'm happy to look to the long side if we can start breaking the new highs and start looking at new opportunities to the long side. So that's what we're looking at for crude today. We are bullish as long as we can break intraday levels to the upside. And it will flash over to an intraday level here real fast. You see here, if we can break above these 100.25s, I will start to look for the long side. Or if we break down below yesterday's high, which is coming right here at the 100.93, I will start to look for bearish activity, trade back down inside of yesterday's range. So those are the two directional biases. There's the bearish above, bullish below mentality that we're using for today. Let's go ahead and go over to the next instrument. Let's start out with the S&P. We're going to look at all the stock index futures, but let's start with the S&P. Blow this up here. All right, kind of like the crude, we do have a fib ratio put on this one as well. You see this most recent swing low to the anchor high. We are seeing all of our levels hold so far. We tested the 38, we've tested the 50, and we're just waiting for this thing to push on higher. The target for this such ratio is going to be up here around the 1925s, the 1924s. So somewhere in that range, we're looking for this market to go ahead and extend up. Now, if that happens semi-fast, that's also going to come into play with the upper portion of this channel. You see this channel that's been drawn in here for oh so long. Going to test the upper portion of that channel. So just another measured move, guys. Just another measured move. We went into this sideways consolidation slop and chop. We'll see if we can go ahead and measure that from an intraday perspective. I will continue to look to the long side this morning, buying that we do not fall back down inside of yesterday's range. Just like the crude, I'm very cautious here. I want to see if we're going to stay above and continue higher, or after a big day like yesterday, are we going to have an inside day? Now, I know that we're opening up right now above yesterday's high. We can see that. We're above yesterday's high right now. But if the markets open up and we start to drop down, now we're running the risk of trading in an inside day. And what I mean by that is usually after a big day, you're going to see one of two things, a thrust as I call it. You're going to see one of three things. You're going to see it get this little stair step, or this little jive to the upside, which is a very bullish. You're going to see it kind of just consolidate, or you're going to see it kind of pull back here. So all of them are important moving forward in how the market trades moving forward, but I'm just very curious. It's a high likelihood that we would get one of these. If not, we're going to see another day of upside move, and then you will see one of the three. This is usually the topping pattern of most big thrusts. Not all thrusts, but most thrusts. So definitely something for us to take note of, and we're going to see exactly what we have today, and that's going to help us moving forward. But enough about that. What happens? What are we doing today? If we stay above yesterday's high, I will continue to be bullish all day. If we drop down inside of yesterday's trading range, I will first off be a little bit cautious because we do have some support here. You see these previous highs, this previous high, that previous high minus the wick, so basically the opens of them bars, they all come right there around them 85s, right there around them 86s, 85s. If we get down below there, now I can look for shorting opportunities. But if we're looking short on the stock index futures, there's a good chance we're going to go to the Russell, and that'll be our next market, and I'm going to show you why. And it's going to be pretty self-explanatory. But anyways, to the long side, I'm going to be looking S&P and Russell. Definitely the S&P because S&P has absolutely nothing to hold it up. Path of least resistance is to the upside. And anything to the downside, I got to be extremely cautious with the S&P because we are running into some support if we start to sell off. So In a perfect world, we're going to see this thing go ahead and start to push back to the upside, start to get some momentum, or just slowly creep to the upside. That would be fine as well. But nonetheless, that's what we're looking for. Let's go over to the Russell, and I'll explain why the downside looks a little better there. Okay, this is the Russell. We can get rid of this line. We just broke that yesterday. All right. With the Russell, we've been talking so much about the support we just went through. Testing over and over and over and over here at the 1090s. Just over and over, just could not break it. Every time we got sold off into this little containment ship area, we were buying this. You guys remember the last 2 months, we've been trying to buy these areas, buy these lows. Every time it comes down here, got smacked right back up. Come down, got smacked right back up over and over and over again. So that has worked out tremendously for us. Now that we've gotten a little bit of a push, what do we do from here? First, we got to go back and look at price levels. Previous highs, previous lows. Mark up where our support resistance is. Right now, we had a nice big 2-day thrust to the upside. And now we're looking to see, are we going to go ahead and break above this resistance? If so, awesome opportunity to the long side, right? Because we got in the S&P, we were talking about yesterday's trading range. What so happened today, yesterday's trading range comes right into play with the previous swing high. So really, really nice confirmation there. If we're able to push above yesterday's high, really gonna give us a nice opportunity to the long side. If not, you can see what the Russell brings that the S&P didn't. It brings this resistance. The S&P did not have this resistance pushing down. As you see, this Russell still has some intermediate resistance here. These are the 50 and 100 period EMAs. The intermediate term momentum still pushing down on top of us. As you see, you got the 8 and the 21 pushing up here, but you do have the 50 and the 100 pushing down. So we're in kind of a pinch area, as we were talking about earlier on crude. We're in a little bit of a pinch area here with the momentum. But nonetheless, if we're able to bop above yesterday's high, awesome opportunity to the long side. Plenty of room to run all the way up here above the 50s, up to about the 54, 55. And then if we do start to roll over and it provides us some downside opportunity, the Russell, the reason it's a better opportunity is simply because the momentum here is still shifting to the downside. So we got to be cautious to the downside simply because that will cause us to be trading inside of yesterday's trading range. So we'll have an inside day. So that would cause us to have an inside day, which is just a little bit different environment than if we're trading outside of yesterday's range. We won't have as much of a bullish or bearish nature. We'll probably lock in profits a little bit sooner on our positions than we would if we had a trending or a breaking out market. So there are some different elements that we will apply to the trading, being that we do stay inside this range. So definitely got some options here. If we start to get bullish, we got the Russell and the S&P opportunities. Both of them going to be great to the long side. If we start to break down on the stock index futures, I would say the Russell is going to be your safest bet. Path of least resistance probably going to come to the Russell. It's just because it's got some of that momentum to the downside already, and the S&P has all that support that's holding it up. So it's causing a little bit of trouble there moving forward. So let's go over and take a look at gold. Gold, the only reason I wanted to show you this is because we are really, really getting pinched in here. You see we got a measured move in gold, low to high, pull back here, a nice measured move in gold with targets up above, but we are really getting pinched in here in gold. Really, really, really getting pinched in here in gold. So we're waiting for a nice big break here, one way or another. According to the measured move, we would think it would break to the upside. but we're not gonna get too crazy here as an intraday traders. We're just gonna go ahead and wait to see the break. But the reason I wanted to show you is because it's just a matter of time. We could get some really good moves here in gold. So if you guys are interested, there could be some really good gold trading opportunities coming up here in the near future. And then we always want to take a look at bonds here. The reason we look at bonds right now is simply because they have so much to do with the stock index futures. We had the stock index futures push higher yesterday, new all-time highs. What did the bonds do? They actually pulled back. There's been some days here recently where you had both of them pushing up. You had the indexes pushing up and the bonds pushing up. I know they're supposed to be a little bit inverse, but sometimes it just happens. But more importantly, I'm curious if the bonds are going to hold this support and start to rally again, which will put a sprinkle on the S&Ps and the stock index futures and cause them to get maybe a little start to roll over, or the bonds here are going to just dance around for a while inside this range and then maybe roll right back over and drop back down. Definitely something for us to consider, definitely something for us to watch, because it will have a factor in how aggressive or conservative we are from an intraday perspective and also on our swing positions, or if you do swing trade. But it's definitely weighing in my mind whenever I'm placing my swing positions. So, anywho, anybody have any questions about what we're looking for? Volatility index, one final thing. Now you know why we broke to new highs yesterday. Volatility index broke down below them 14s yesterday. On our way back down to 13, and then the ultimate low would be the 12s. That would be, I believe, close to historic lows. Let's go ahead and pull them up. 1245. In the last 3 years, you're looking down at 1245. So yeah. Once we broke them 14s there, now we're pushing down. Maybe get down closer towards these 13s if we could. That'd be crazy, but that will help the stock index future drive higher. So get this volatility way down here. So definitely something to note, guys, because every time it comes down, what happens? It comes down, we get a jolt back to the upside. It comes down, we get a jolt back to the upside. And it just happens over and over and over and over again. So these jolts to the downside are short-lived. Just a matter of time before we get a little pop here. But I just definitely wanted to keep you guys on board and kind of go over that so we're all on the same page. And whenever I will talk about volatility in the VIX every day in the room. So I just want you guys to know what I'm looking at. But anywho, any questions, guys? Any questions about what we're looking at? Any price levels that we need to maybe look over and recover, or you guys good to go? Just waiting for these markets to start to do something, whether it be crude or the indexes. Just waiting for a move here.